We got the hottest IPO in the history of forever, and these are the images that Google wants to show me. Come on, I need something as hot as this IPO. Okay, yeah, that's what I like. Now this is hot enough to melt any snowflake. Who's that, Diddy in the background? He knows it with his little side eye. Are you feeling hot and bothered over this Snowflake IPO as well? Cloud infrastructure, is that what does it for you? Well, that's interesting because clearly everyone else feels the same way. So in this video, we're going to talk about the Snowflake IPO and what Buffett has got to do with it, the supposed non-technology investor, getting all up in all these technology companies nowadays. We're going to talk about what's going on and how to play it. And don't forget, if you want more details about how we invest in the market, myself and most of our Fallible members, check out this free training. We're up almost 55% this year. The strategy is doing great. It barely takes us any time. It's very easy, very effective. That's how investing should be. But definitely check that out. It'll make what we're talking about in this video make more sense too. So as you already know, Snowflake was supposed to have an IPO at 120 and they opened up around 245 on the actual IPO day. So already 100% increase on the day of the open. Like I said, investors were hot and bothered. They still are. And what's really getting them going, why Snowflake is so popular, is because they're a cloud infrastructure company, which is kind of funny because you normally see this type of crazy action around something more popular or something more, simple to understand, not just database cloud software. So Snowflake does something similar to Oracle, but it's easier because they can scale up or down and have variable pricing. And really it's the main pure play company on cloud computing in the market. Everything else, Google, Amazon, even Oracle, they're involved in so many different things. But Snowflake is all about the cloud. But okay, maybe the cloud isn't what got everyone excited, but what did get everybody crazy is that Buffett was getting into this thing. He had $250 million worth of Snowflake at the IPO price and then got another 4 million shares at the debut price. So he made more than 800 million in one day on this investment. And Buffett is not an IPO guy at all. The last time he invested in an IPO was for Ford Motor Company back in 1956. That's a long time ago, but this probably isn't a Buffett play. This is more of a Todd Combs and Ted Weschler. And those are the two guys that will take over Berkshire eventually. Supposedly, maybe. And I think they're also the guys behind all these tech stocks that Buffett has been investing into. Because Berkshire has made a ton of money on Apple this year as well. Apple is 40% of their portfolio or something? Which is interesting for a non-tech investor like Buffett. But Buffett is really against this whole IPO buying thing. He said in 54 years, I don't think Berkshire has ever bought a new issue. And this is when he was talking about the Uber IPO. And he talks about it more. He says the idea of saying the best place in the world I could put my money is something where all the selling incentives are there, commissions are higher, and animal spirits are rising, that's going to be better than the 1,000 other things I could buy where there is no similar enthusiasm. Well, that just doesn't make any sense. And what he's talking about here is the hype, because that's what all these IPO plays are, a bunch of hype. In his 2012 annual shareholder meeting, he talked about how he tries to stay away from public market newcomers. He went and said, the idea that somebody is bringing something to market today, a seller who has choice of when to come to market, and that security, where there's going to be a lot of hoopla connected with it, is going to be the single cheapest thing to buy out of thousands and thousands and thousands of businesses in the world is nonsense. In 2016, he compared it to buying lottery tickets. You don't have to really worry about what's really going on in IPOs. People win lotteries every day. So there's a few things that Buffett is talking about. The first is that these IPO plays are all based off emotion and hype. There's no real edge there for your normal retail investor, even for Buffett. And he's a guy with his strategy that is really focused on fundamentals, right? Value. He throws out everything that has a bunch of hype, which is why he wasn't a big tech investor ever. In the whole .com bubble, he completely avoided it because he had that same mentality. He's like, I don't see the value here. I see a lot of hype. I'm not into it. And that goes back to his second point about all of this, is that he sticks to his strategy, because he's saying, why would this IPO be the cheapest thing in the market when they get to price it themselves? And then you have all this hype that throws the price even higher, which is exactly what happened with Snowflake, when in the market there's thousands of other opportunities that you can look for that are going to be mispriced versus this IPO that just got started on the market. And I completely agree with that, because every time one of these IPOs come, everybody is getting so excited and they're just throwing any strategy or caution to the wind. They just want to jump in, which is exactly what's happening here with Snowflake. And regardless of whatever way you look at it, there's a very small chance that you actually have a real edge. So if you're a fundamental investor and you like to look through a company's financials before you're investing, well, how are you going to do that when this company has been non-public for so long? Sure, with the IPO, they release documents, they release their numbers, but you're not going to know more than the insiders who actually bought the shares on the primary market. You're still on the secondary market. You're not buying directly from Snowflake. Snowflake is selling to all these banks and other primary buyers, and then they put it on the market where retail traders can get it. And those primary guys know a lot more. So how are you competing? Your best bet, if you think Snowflake is a good company, is wait for a few quarters, get some good information, get their reporting. But okay, maybe a few people are cloud database experts because maybe they work at places like Oracle and they know what's going on and they want to jump into the IPO. Okay, maybe. But most people, like the people you see on TikTok who have been talking about Snowflake non-stop, what are they buying into? The hype. But okay, maybe you're more of a technical trader and you want to do some technical analysis. Well, what technical analysis are you going to do on these two bars right here? Nothing. There's nothing you can do. Even William O'Neill, the market wizard who started Investors Business Daily and wrote the book How to Make Money in Stocks, for IPOs, he still waits for some type of base to form on the technical side. You need to see how the price action actually works so you can see what the market thinks about this particular stock. You don't have anything to go on when it's this early. So we could go back to the Facebook IPO. How would you have played this? Well, as you can see on this weekly chart, it got hit hard. But we know Facebook became a killer stock, right? But where would you enter? Well, there's a few places. After this many weeks, you have some consolidation. You have entry points. So one entry point could have been right here. Another one could have been after this mess and this huge breakout here. And you got a real ugly cup with handle here. Now this is like a year into the thing. It's still a fresh stock. It's not exactly a pure IPO play on the first day that it becomes available, but it's a new stock. And it's okay if you're getting in a year later even. These are much better entries, and just look what happened after this one. Stock went ballistic. In O'Neill's normal strategy, which by the way is a growth stock strategy that he focuses on, he waits for companies to have multiple years of great revenue and great earnings. And even after waiting that long, he still catches the biggest winners like the Googles and the Amazons. Because before stocks go on their massive runs, they usually have years of that growth in their data that you can see. So it's not some big secret. So he waits for the fundamentals to line up with the earnings and the revenue. And then he also waits for a proper base in the technical chart. You put those things together, you can make a lot of money. That's not to say you can't get in earlier on something like Snowflake, but at least 8 weeks. That's how long you want to wait to see kind of what the market is thinking about this stock. Yeah, I know it had an amazing first day, but is down 11% right now on the second day here, which is not surprising. And I wouldn't call that a terrible signal either. But honestly, at this point, I don't know what you would think about this because you need that time. And this is really a problem in investing that everyone has because it's just the way our media is built. Everyone is so focused on the next hottest stock, on the next shiny object they could jump into because it's exciting and it's new. And the other big emotion behind it is the fear of missing out. If everybody's jumping in Snowflake, even Warren Buffett, how am I going to miss out on that opportunity? I can't. I got to buy in too. And that's why when we talk about markets and all our market reviews, we aren't talking about fundamentals as much as we're talking about sentiment and emotions because that's what drives prices. It's all people in this game and it's all psychology at the end of the day. And that FOMO is one of the biggest emotions that drives everyone. See your neighbor getting in and you're like, I got to get in too. I'm not going to let him make more money than me. And that emotionally driven investing is not real investing because you get screwed down the line where the guy with the process who's actually focused on making money, not getting distracted by his emotions, he's going to take your money. It's the blind leading the blind with this IPO style emotional investing. And it's why 99% of people in the market are losing money. See, if we're even talking about stock picks, right? Not just Snowflake, but any hot stock. Picking the stock is only 10% of the process. The other 90% is how you actually manage that position. So how many shares are you buying? How much are you investing? When do you sell? When do you take profits? How are you managing that position once you're in it? Risk management becomes a very big thing. In fact, it's the number one thing. And that's what the best investors are always focused on. Risk management. How do I make sure that I don't blow out of this market? They could care less about what the new hottest IPO or stock is. They don't even look at their returns day to day. The only thing they're focused on is their process. How do I keep hitting these reps? How do I keep executing so that over the long term, I'll get the returns that I want? And that's the key. You got to have an investment strategy and a process. And it is exactly what Buffett was talking about just now. He never cared about IPOs because it didn't fit into his value process. Now with this whole Snowflake thing, I mean, there's a change of guard happening, right? It doesn't seem like Buffett headed this whole thing. And I'm not saying the Snowflake was a bad investment for Berkshire, but it's not a standard Buffett investment. And those guys, they're playing at a way different game than the rest of us because of the position position that they're in. Just like when good old Grandpa Buffett can sweep in a crisis and buy up a bunch of shares of banks really cheaply. But what he said about IPOs still stands for the rest of us. Just focus on your process. Don't worry about what's shiny over here and over here. So in the investment strategy that we use that I talk about in this training, which there's a link in this video and down below in the description comments, we would have never gotten into Snowflake, and we didn't. It's not even on our radar. So you can see right here, we have a list of stocks, and they're ranked by which stocks have the highest momentum. And the thing that tells us that is the TSI, and that's a trend strength scanner. So you can see right here, Tesla is number 1, Zoom is number 2. And what this does is it ranks all the stocks on the NASDAQ and tells us which ones have the highest momentum. And what we do with our strategy is that every month we're rotating into the 5 stocks with the highest momentum. So the idea there is that we're always in the stocks that are moving highest the fastest. But more importantly, we have very strict rules of exactly what we're gonna do. We only rotate once a month, meaning we only get into new positions once a month. We have specific targets where if a stock hits a certain level, we'll sell some and take some profits. We have stops where if a stock drops a certain amount, we get out of it. We have all these rigid rules in place so that we follow them consistently. And we don't stray from it, which is why I could care less about the Snowflake IPO because it doesn't fall into my universe. I stick to what I'm good at. Or I wouldn't even say good at, it's just what's within my scope of view. Stay in my lane. That doesn't mean Snowflake wouldn't be a great investment, but if it doesn't fall into my strategy, then it's not a great investment for me because I don't have any rules or process around how I would play that IPO, which is what a lot of people are missing, right? Buying stocks without any idea of when to sell it or what to do when certain things happen. No plan, no strategy. And like I said, we focus on our strategy and consistently execute, and that's why we're up over 50% this year so far. And that's why since 2008, we're up over 2,000% versus the NASDAQ itself only up 545%. You can see the difference between these two lines. This is our strategy, the blue line. This is the NASDAQ. And the only way you get that long-term success and wealth and compounding is doing that exact thing. Focusing on your strategy, not getting distracted, not feeling the FOMO when people are all hyped up about the latest IPO or whatever. And my preference with the strategy, and there's a lot of different strategies that work, but obviously the one I'm using is my preference. I like quant strategies because I'm getting a simple number right here that tells me what to do. So I don't have to do technical analysis on a chart. I don't have to comb through financials for fundamental analysis. It's all broken down into this simple number. It's what I love about quant. And for me, I really like it because then I don't have to spend a bunch of time doing research, which I don't have time for. This strategy literally takes me less than 15 minutes a month to execute with great returns, as you've seen. And it lets me detach from the market. I get alerts straight to my phone when I actually need to buy or sell because it's all pre-planned ahead of time. So the only time I actually have to jump into the market is when I got to do something. Rest of the time I could stay away, and that's important because then I don't feel this FOMO that everyone else is feeling. I'm not getting all hyped up about Snowflake because I can go focus on something else, like my business, my job, whatever it is. The more you stare at the market, the more you get sucked into making a stupid decision. Read about Snowflake all day, guess what? You're way more likely to buy it. So that's why I like to detach. If it's not relevant to me, I don't want to see it. Because to be a good investor, I don't want to be in the market for hype and excitement. I'm just here to make money. And the rest of the time, I'm out. It's not a game to me. I know a lot of people treat it like it is one. But anyway, if you want to learn more about the strategy that I'm talking about and how we do it, definitely check out the training. Link in this video and down below in the description and comments. It'll teach you everything you need to know to do the same thing we do. If you like this video, make sure you subscribe because we got more coming. Do that, and I'll see you in the next video. Stay fallible out there. Bye.